Ladies and gents, traders and investors, wishing you all a very happy Easter. The topic of discussion on our presentation today shall be the quest for safe haven assets by traders and investors. The transition in various asset classes from safe haven to not so safe to risky assets has been gradual but insignificant or significant. We've gradually moved on from Swiss francs to Japanese yen to the US dollar to gold and now to nothing in the current geopolitical scenario. Before we move on to our presentation, let's look at the disclaimer/disclosure clause. The contents of the presentation are for information purposes only. The material has been obtained or derived from sources believed to be accurate, but we do not guarantee its accuracy. The presentation is the 36th of a series of interactive videos aimed at educating our viewers, and we would like to warn all our viewers of the risk associated with the business of trading and investment. Securities investment and trading is a highly risky business, and there exists a possibility of partial or total loss of investment. The ideas and opinions in our video are solely based on our analysis of the market, and we do not advise, recommend, or guide anyone to take any trades based on the contents of this video. And we do not take any responsibility for partial/total losses arising out of trades based on the contents of this video. Ladies and gentlemen, traders and investors, a very warm welcome to our channel Vega. In today's video, we should talk about the need to show perseverance with developed successful techniques which may show signs of failures at times in turbulent, volatile market conditions. Due diligence, discipline, dedication are some qualities that take you a long way in volatile markets. Nimbleness in noticing opportunities and pitfalls created by sudden market moves that can help you improve your chances of survival in volatile and turbulent market conditions. Volatile market conditions make the option premium inflate or go high because of increased values of Vega or volatility. Volatility index or VIX is the measurement used by US markets for rise and fall in market turbulence or volatility. Opportunities come in the form of selling option premium, selling call options, or buying put options. Complex option strategies like straddles, strangles, and iron butterfly, combination of bear call spread and bull spread at the strike price should be avoided, as the option premium are inflated in turbulent market conditions, and these strategies may prove to be very expensive because of the high value of VIX or Vega. In the week gone by, oil is continued to remain volatile and has chosen or closed at a high as compared to the previous highs in the last 4 weeks. Gold seems to be stable and has steadily made a higher low on the 2-4-minute and the daily chart. However, one needs to see if the oil prices keep going high because of the current geopolitical conditions, then the US dollar could go higher and could negatively affect the metals like gold and silver. With the US dollar strength going high and the flow of oil getting restricted, the Strait of Hormuz, US dollar/JPY is poised to revisit its all-time high. We need to see if the government of Japan is going to intervene and raise the interest rates to allow the Japanese yen to gain some strength against the US dollar. On today's video, we shall talk about two currencies which are quite important. The first one being the US dollar Japanese yen. The second one is the cable or sterling versus US dollar. And then we shall talk about Dixie, the US dollar index, US dollar spot market chart, and then we shall talk about gold, silver, NASDAQ, and the S&P 500. Fellow traders and investors, the chart that we see in front of us is that of Dixie, the US dollar index, and E is the daily chart, which we've been visiting for the past 7 to 8 weeks, or maybe for the last 3 months ever since the new year started. As we can see, that it has been in a sideways trend, and no matter what the geopolitical conditions are, but the index has still not been able to break out of its sideways trend. There is a very strong supply above the area where the current location of the index is, and it will take a lot of strength and a lot of momentum for the index to break out of this area above 100.391 and all the way to 101.9 before it decides to go back up further and get into an uptrend. As of now, we still have to wait and see if the index either reverses, which is got a higher probability, or whether it tries to break out and gets into an uptrend to bring the US dollar into a very strong position against the other currency majors. But we still need to see how it plays out under the current geopolitical conditions and the economic data that gets released in the next few weeks to a few months. Ladies and gentlemen, traders and investors, the chart that we see in front of us is that of US dollar slash JPY, and is the weekly chart that we're looking at. We're touching upon this chart for the first time in our analysis as well as in our commentary. Why we're looking at this chart today is because of the reason, or because of its proximity to the all-time high that was established in the month of June 2024. This was when the country was being ruled by the Prime Minister, Mr. Abe, who had his own policies that had led to the Japanese yen, or the US dollar Japanese yen, pair into a continuous uptrend. It was in the month of June 2024 that this particular uptrend ended, and it managed to come down for a small time period up until September 2024 to go back up again, and then it went into a sideways trend rather than an up or a down trend. But the sideways trend as well has been stretched over a long period of time, as one can see that the travel between the lows and the highs is at least about 3 to 6 months. In the month of January, we saw that there was a sudden dip in this particular currency pair, and that was purely because of the government of Japan deciding to raise interest rates as compared to the other currencies which were seeing interest rate reductions during the period. That's how we see a very sharp decline in prices, or in the price of this currency pair, and strong red candles on the weekly chart. But as of now, we can see that the candles printed in the last 3 weeks are basing candles or dojis, and we'll have to see how many of these are printed by the time it either moves past the old established high between 160 and 162.12, or whether it reverses to continue with its sideways trend for the time being. This particular asset class or currency pair needs to be watched over the next few weeks, as it may throw open an opportunity to go short for a nice long range between 160 all the way up to 153.3 if the sideways trend continues. So therefore, we need to keep an eye to see if we would like to enter and become a part of its sideways journey, or if it breaks out above 162, then we need to be careful to wait and see as to what action does the government of Japan take to bring down the price of the currency pair, or bring in strength into Japanese yen, and allow us to get into a short to travel back to the 153 area. So this is the play in this particular currency pair. That's the reason we have visited this chart this week. Ladies and gentlemen, the chart that we see in front of us is that of GBP/USD, which is also known as cable, and is the weekly chart that we're looking at. Before we go to the current price position, we would like to establish that the reason that we analyzing it for the first time or doing a commentary upon it is purely because of the location of the current price at about 1.3168 or 3168, and the reason we are trying to visit this chart is that it could open an opportunity for us to get into a long or a short depending upon the way the candles are printed during the next 2 or 3 weeks. Before we start analyzing it on the daily chart, we'll first look at the weekly chart and establish certain important points on this chart. The first green area that we can see here is the low established at the time of Brexit. It was in the region of about 1.18 or 19, and then it was broken further at the time of COVID to establish a newer low, which was at 1.14, and then we see the lowest low established so far, which is between 1.036 to 1.15. That's the supporting candle on the weekly chart. As we can see, this was the low established at the time of Theresa May, that was at the time of Liz Truss, and finally it managed to get into an uptrend after Rishi Sunak, the Prime Minister, took over from Liz Truss. And ever since then, one can see that on the weekly chart, we are in an uptrend, although it was sideways for about from July 2023 all the way up to December 2024. The sideways trend started in sometime in March 2023 before the steep climb at the time of Rishi Sunak, the Prime Minister, who managed to bring the currency pair back to 1.25, and then it went into a sideways trend for the next 2 years to come back up again and get into an uptrend, a sharp uptrend between 18th of January 2025 up until July 2025, and then it has been in a sideways trend again, and as of now, as we speak, we are at the lower range of the sideways trend. The current picture will be more clear if you look at the daily chart to see what is going on here. And as one can see, we've had some strong drop candles printed in the last few weeks after the commencement of the US-Israel-Iran war, and we still need to wait and see as to what is going to happen in the next couple of weeks, whether the current geopolitical situation is going to allow the currency pair to take out the bulls in the area between 1.3 and 1.31. We're very close to this area, and we need to see if the pair gathers enough weakness to break below this area and close below this 1.3 area to continue into a downtrend from the sideways trend established during the last 6 months. Therefore, please carefully watch the play in the next 2 weeks to see if we can join the reversal if it happens and get into a long, or if it breaks down, then we could try and go into a short with a tight stop loss, so that if the pair decides to continue with the sideways trend, we do not lose too much of capital. So the current trade in play as expected from the historical movement of this particular currency pair should be a long, but if it breaks below 1.3 and closes below 1.3 to establish a new downtrend, then we need to see the supply above this area where one could go short with a tight stop loss. Ladies and gentlemen, fellow traders and investors, the chart that we see in front of us is that of US oil spot and it is the daily chart. The US oil spot has had an explosive week with very strong blue as well as red candles. It's been guided by the geopolitical news coming out every day of the week, and either it established a nice drop candle or a nice rally candle, but it has managed to establish a new high as compared to the previous week's high, and we still need to see if it manages to go up and break its old established high at about 114.97, which was done about 4 weeks ago, and if it manages to close above this area or it just wicks and comes back into the 100 area again. However, we need to see that if we wish to get into a long, we must try and do it from a safe area which is still lying between 88.5 and 75.58. This area needs a lot of capital to get into a single oil trade, purely because of the reason that this asset class has been having ballistic moves in either direction, and it could just wick anybody out to stop you out of your trade and go back or down depending upon the kind of news that comes out during the week. There are no sell trades as of now because there is no supply above the current price position, which is at about 103.740. We still need to wait and see any supply area established before we think of shorting this particular asset class. Otherwise, longs are the only trades that we can get into, but we need to have generously placed stop loss limits so that we do not get wicked out because of sudden ballistic moves in this particular asset class. That we see in front of us is the of XAU/USD, which is the gold-based ETF, and it is the daily chart. We've seen that the particular ETF has given us a lot of buying opportunities in the last 1 year, and then after establishing an all-time high at about 5600, it managed to come down and visit the area around 4398. This was a low that was established in the month of February, and it managed to bounce up from here, and the rebound ended at about 5400, which was a lower high compared to the previous all-time high. After that, it has managed to establish some lower highs, and then it managed to form a lower low as well in the week before last. During the last 1 week, it has managed to print some blue candles and establish a new low as compared to the previous low. But one has to see if the particular asset class manages to establish some more higher lows and gets into an uptrend, or whether it cannot break out the previously established highs and starts reversing and forms a new low below the current low, which is between 4,000 and 4,500. We've got XAU USD as an asset class which is trading purely out of the strength of US dollar or the weakness of US dollar, and not as a safe haven asset as it used to be in the previous 1 year or 1.5 years, where people were trying to buy gold or XAU/USD USD as a substitute to the US dollar or the US dollar Japanese yen, which used to be safe haven assets in the earlier years. Therefore, on today's date, if gold is being bought or if you're establishing higher lows, is going to be only on the basis of the loss of strength in US dollar. And fellow traders and investors, the chart that we see in front of us is the FXAG/USD and is the daily chart. What we've been seeing on this chart for the last few weeks is that it has been going sideways or printed red candles alternated with blue ones. But this particular asset class gave us lots of opportunities in the last 1 year to make good profits out of long positions because of a continuously established uptrend. The uptrend ended at about 121.73 in the month of January when it had some good strong drops, bringing it back down to 61 or 63.77, which was a lower low below its previously established low at about 72.18. After that, it made a rebound and managed to go back up, but it couldn't go further up beyond 95.6, and there was a new lower high established below its previously established higher high. After that, it made a few blue candles and printed another lower high, which was between 89 and 85. It then printed some continuous red candles in a row to revisit its previously touched low at about 63.9, and it wicked to the area of 61.0 and then go back up again at about 68.0. So that was a blue candle printed in spite of it revisiting and breaking or trying to break the old low, but it hasn't successfully done so and is presently going sideways. One needs to wait and see if it breaks below the 61 area or the 63 area and closes below this area to establish a new downtrend, or it manages to print some higher lows to print or to establish an uptrend and allow the bulls to get back into trade again. Ladies and gentlemen, the chart that we see in front of us is that of ES or the S&P 500 and is the daily chart. We have been visiting this chart for the last couple of weeks, and the reason behind continuously monitoring this chart is purely because of the reason that it has changed its move from an uptrend into a sideways trend and then into a downtrend. It was in an uptrend between April to November 2025 when it decided to come back down and establish a lower low compared to its previous low, where the new low established was at 6626, and that was the supporting candle that was formed in the month of December 2025. It then rebounded again to touch its all-time highs, but then it managed to stay in a sideways trend with its lower bound at 6784 and the upper limit at about 7082. Then at the end of February or beginning March, it managed to establish a lower high compared to the all-time high, which was followed by two newer low highs in the month of March under the effect of the US-Israel-Iran war, and it broke the immediate support that I had printed in the month of December with some strong drop candles to establish a new low at about 6400. At the beginning of last week, it managed to print a nice explosive candle and then some basing candles to close the week, all under the influence of geopolitical news, as the economic data has had no influence on the formation of the candles in the last few weeks. Now one needs to wait and see if it manages to print some higher lows and get back into an uptrend to join the old sideways trend or break out above 7082 to establish a new high, or does it reverse back and close below 6400 to allow the asset class or the ETF to get into a confirmed downtrend? Fellow traders and investors, the chart that we see in front of us is the of NQ or the NASDAQ, and here's the daily chart. This particular chart we've been visiting for the last couple of months, and why have we been doing so is purely because of the reason that the uptrend established between April 2025 to November 2025 was converted into a sideways trend during December to February, and then into a downtrend from the beginning of March or the end of February this year. In the last week, it printed a nice explosive candle on Monday, followed by another green candle on Tuesday, and then two basing candles during the last 2 trading days. What we need to see is if the ETF manages to reverse from this area where it is, because it's a nice supply area, and one can see it on the 240-minute chart that this area was tested earlier on before it bounced back from 23710 back into the same area. Therefore, if we need to go short, we can't try this area because it's not a fresh area. In order to find a fresh area, we should look at shorting it between 24,600 with a stop loss above 24,800. With two positions, we could look at getting our targets at 23,760 and 23,320. There could be a chance that the ETF manages to break below 23,000 or close below 23,000 to come back into a nice confirmed strong downtrend. As of now, it is being supported by the demand zone between 2200 to 22,700. It's this particular demand zone that is currently in operation and supporting the bulls to prevent the ETF from coming down and close below 22,000 to establish a strong confirmed downtrend. Ladies and gentlemen, traders and investors, we hope that our presentation has been informative and exciting enough for you to come back and watch all our videos. We shall continue with our weekly commentary and analysis and shall be touching upon events which were the highlights of the week. We shall also talk about interesting asset classes each week. If you liked our video, please give us a thumbs up and press the button underneath to subscribe to our channel Polo Vega and watch all our videos. You may also visit us at our website www.polovega.com or get in touch with us through our Twitter handle at Polo Vega. Please keep saving, investing, and getting wealthier until we meet next. We thank you for watching our video, and please like, share, and subscribe to our channel Polo Vega.